Hello guys, welcome back to the second part of microstructure for this full course on supply and demand. So we're going to continue in where we left off last time. So last time we talked about microstructure, the protected highs, protected lows. We talked a little bit on how institutionals will protect, some of the swing highs or swing lows depending where the market where they want to take the market, right? So last time we were talking we were talking about fractals. We talk about fractals a little bit. So what do we mean by fractals? Well, we mean that the market, it's fractal at all times, because just like we draw over here, right? And this was a daily, and within the daily we have a 4-hour structure, right? And the 4-hour structure is gonna be turning bearish and turning bullish at all points during the market. And we only use time frames. We don't use time frames to trade, right? Like on the retail world, sometimes you have a lot of traders that will say, oh, I'm a 4-hour trader, I'm a 1-hour trader. Like with institutional order flow, we use time frames to just as windows to see through what institutions are doing and where the orders lies in the market, to identify which swing highs or swing lows are protected, and then place ourselves on the right side of the market, instead of just be drawing support and resistance everywhere throughout the charts, right? The market, it's fractal at all points, right? Even though we have a perfectly bullish market, within that structure we have other structure, lower time structure, going bearish and turning bullish and turning bearish short term and turning bullish, right? So if we keep the same layout that we have from last video, and we say that the orange is the daily, and then we have over here the green is the 4-hour, right? But if we zoom in, right, if we zoom in into this, then we can kind of see that within this 4 hours we will have maybe a 1-hour a bullish structure that turns bearish, right? That turns bullish, okay? That turns bearish, right? That turns bullish, that turns bearish, that turns bullish, that turns bearish, and we're just gonna stop with that here, with that leg, right? So we are going to make this inner 1 hour, we're going to make the 1 hour, we'll make it blue, the 1 hour blue, okay? And then if we zoom in, this is where it starts to get crazy, and I told you last time I was gonna blow your mind, okay? Within this inner 1 hour, we will have, guess what, we could have a 15 or 10 minutes or 5-minute structure that is going bullish, that remains bullish, then turns bearish for a little bit, then turns bullish, then remains bullish, turns bearish, then turns bullish, that turns bearish for a little bit, and then continues bullish, that eventually is going to turn bearish again, right? And you have all this. So we are going to make this one, we'll make it purple. So just so we don't get lost, right? We know that we have a daily. If we zoom out to where we started, we know that we have a daily bullish structure, right? That is the orange. Then we'll have a green 4 hours. Then we have within the green 4 hours, we have a 1 hour, which is the blue. And within the blue 1 hour, we have a purple 15 minutes. And within the purple 15 minutes, we can have a 5 minutes, different structure. And if you don't believe me, that's where we're heading right now. Okay, we will delete this quickly because we don't need that. But we have this bullish, right? We're gonna start from here, from the bearish structure. Within, we said that we have this green over here to keep the same colors of the other ones. So we have this daily bearish structure. Okay, within this bearish daily structure, like you can kind of see it from here, but we can go to the 4 hours. And on the 4 hours, what do you think we're going to see? Right? On the 4 hours, we are going to see that green 4 hours bearish structure that turns bullish for a little bit to then turn bearish, right? And then right now to remain bearish. And this is where we are right now with the green, with the green 4 hours, right? And we have one more leg over here, and that's part of the same 4 hour green structure that turns bullish for a little bit, that turns bearish to continue the daily, and then remains until now basically bearish, right? Now within that green candle, if we go to the 1 hour, with the green structure, if we go to the 1 hour, we can actually see other structure. Okay, within that we can see what color did we do? Let's go back to the daily. We said it was a blue. Okay, we'll use blue just to continue with the same colors. Now within that blue, that green structure, right, we are going to have just bear with me. I'm gonna make that blue. We are going to have a breaker structure of the 1 hour that turns bullish for a little bit, that then turns bearish, right? That then turns bullish to then turn bearish, to turn bullish again, to turn bearish, to remain bearish, right? To then turn bullish, to then turn bearish, to then turn bullish, to then turn bearish, to then turn bullish again, to then turn bearish and continue, right? And this is when it gets a lot of traders confused, because if you're just trading, let's say for example you say that you're a 4 hour, trader, right? Do you understand that you are following this green structure? So during all this time over here, you had one breaker structure, and now you're just sitting here waiting for to take another trade. Then barely like that didn't give you an entry over here, that kept going south on this breaker structure, and you probably during this, even if you got an entry over here and over here, you got two trades. But how long do you think this is? These two trades, it took it took 11 days. Basically, the breaker structure actually happened from here. It took 22 days for this leg to form, right? For this. And I see a lot of people that they're on the charts every day trying to take trades on the 4 hour every day. When you can see how long this takes, then this other run over here, you know, this leg, this pullback, you know, once you saw this breaker structure over here, by the time you want to get in over here, the market already wants to flip on you. Okay, and now you're just sitting here, right? Just wondering what's going on, because people will see this breaker structure and now they're starting to see, oh, this head and shoulder pattern, right? So they're seeing this as resistant, and as this price come back down here, they're trying to buy here, buy here, buy here, buy here, and it runs for a little bit but then collapses, right? So we have this other inner structure. So instead of waiting for maybe a setup on the 4 hour here that you have to wait, you had to wait basically another 23 days. You can probably go to the 1 hour, and now we can focus, instead of focus on the 4 hour structure, breaker structure, we can actually be trading this 1 hour inner structure. Then once we zoom in, this moves don't look that bad, doesn't it? Okay, and because inside this inner structure, what we'll find is that we'll see a 15 minutes structure doing the same that the higher time frames are doing, right? A structure that is bullish, right? That turns bearish for a little bit, that remains bearish, right? That goes up and turns, you know, to just grab the liquidity up here before collapsing, right? And we can make this purple like we did in the other one. That will have 15 minutes, right? And if I go to actually see the structure, maybe it lets me. I don't know if it's gonna allow me to go. I think it does. I think it was this one, wasn't it? Oh no, it was up here. So it doesn't let me to go back that far, but same thing over here, right? So it allows us to do it over here, so we can mark that 15 hour, with that 15 minutes structure here, right? We have the 1 hour, and then we have this breaker structure to the upside on the 15 minutes, right? That remains bullish. Okay, and I know it gets crazy right now because I'm marking everything, but this is basically how you can be trading the same thing that is happening on the bigger time frames. The same thing is happening on the lower time frames. So instead of focusing on those huge, you know, moves on the higher time frames, you can be taking trades on the 15 minutes, half an hour, the 1 hour, you know, because now the same leg that we see like this same leg that is happening over here, right? This leg that is going to take 2 months to develop, right? We can do the same on this. On this 1 hour, right? This leg, right? And on this leg, we can do the same. What is the difference between the huge leg and this leg? There's nothing. It's the same inner structure being developed, right? This 1 hour that is coming bearish, right? That break structure leaves behind the man block, comes back into, and now since this is a 1 hour breaker structure, comes back into it with a 15 minutes breaker structure, a structure bearish, to what? To mitigate the orders inside here, that now breaks structure to the upside, right? And now leaves us the man block, right? And same thing that happened on this breaker structure. Now this breaker structure, this is the confirmation that we need on these lower time frames to now take that trade to the upside, right? And now because we know that we have the 1 hour breaker structure and we have the confirmation on the 15 minutes breaker structure, we know that short term we might have this 4 hour leg forming to the upside. And if we are like intraday traders or short term like weekly traders, this trade, now we know we can hold it easily for like 2 days, 3 days, 1 day, 2 days, 3 days, right? And it's gonna take 3 days for this trend, this 1 hour trend, to play out before it breaks structure at this point. And now guess what? We will have other blocks up here, right? The breaker structure that continue bearish comes back in to mitigate the open of this block. Inside this block we have another 15 minutes breaker structure to the downside, and we could enter here and continue lower, right? And then over here, this was our low, right? Now we have another move to the upside. We're still bearish, right? But now this 1 hour fell to go lower, and now broke structures to the upside, leaving behind, guess what? Same setups as before, right? It broke structures to the upside, comes back and mitigates, breaks structure in the inner structure, and then leaving behind other demand blocks, right? That comes back to, once it breaks above them, comes back into him and to mitigate, right? Comes out, comes back in to mitigate even deeper this block, right? And continues, and that's another trade that you can hold for like another 1.5 days, right? 2 days, 3 days. And those are the setups that I take now. Me personally, I even trade on, I actually take my entries on the 5 minutes, inner, on the 5 minute inner structure, because I just understand the fractality of the order, the fractality of the market, and I know where I am in the market at any point, right? Whenever I scroll in, I can easily zoom out. I start from the daily, move into the 4 hours, and I know which range I am, right? So for example, if I was, let's say I open the market and we're sitting over here, right? At this point, I know that I'm on this 4 hour leg, right? Of this daily leg, and then I just broke structure on the 1 hour. So because I know that I'm looking for my zones on the 1 hour, now for me, all I'm doing is looking for this demand block up here, looking for the tap into it, break a structure on the 15 minutes, and going lower in the 15 minutes to, once I see this break a structure to the downside, go up and see inside this little pullback and look at the 5-minute structure and maybe get in with a low, with a really low stop loss, right? A really small stop loss. And this, instead of having the stop loss all the way up here, I'm gonna have the stop loss here, and then, you know, trade it to the downside until we break a structure, right? And then this can easily be a 1 to 4, right? 1 to 4 that played out in what? Basically 2 days, right? Well, actually, from here to here, we're talking that actually played out in 4 hours. This is a 4-hour trade, right? And I'd rather follow this 1 hour structure, but I have to look at it when I get in. If I'm choosing my zones on the 1 hour range, I'm entering on the 15 minutes and 5 minutes and the 1 minute. Basically, I won't take a entry on the 15 minutes. I'll take my entries on the 5 minutes and 1 minute sometimes. Okay, because the same thing, even let's say that let's just delete everything we have here, and if we go all the way down here, we are in the 15 minutes, right? And this is a trade that I actually took this trade today. Actually, let's go to, this is a trade that I took basically today. Okay, I had this structure points. We had this 4-hour move that's still, I mean, this is the 4-hour move, right? That at the beginning I thought it was gonna be this one, the low, but this move up actually didn't, it went above this high, but it didn't break, like it didn't close above. It just wicked it above to grab liquidity to then basically come and mitigate this order, this demand block over here even deeper, right? And I had this zone over here marked. That is exactly what mitigated over here. So yesterday when this happened, right, I'm already waiting for this zone right here to get mitigated. Okay, why? Because to me this one doesn't exist, and this is just one big move down, right? Inside here, this is the 1 hour to me, right, coming down. And as it comes down, I saw a 15-minute structure. I saw another 15-minute structure breaking to the downside, and then this 15 minutes breaking higher, breaking structure to the upside, originating from this protected low, right? This is an institutional protected low. I know price, if it breaks this low, now we might be putting in better structure, but right now so far I'm still bullish on this market, right? And I want to enter bullish place over here. So this looks pretty shitty still to take a trade, right? But as we start zooming in, we can start seeing that this was the 1 hour structure right here that broke. And then as we go down to the 5 minutes structure, we can see that we had this breakers. This was the 5 minutes, the last move down. It broke structure to the upside, came back down, right? And then it traded above this, came back down to mitigate this zone. So now this zone is no longer valid, right? and then it hasn't traded above this high, so this zone is not basically, it's not ready to trade yet. It didn't trade above this. It came even deeper to mitigate this zone even deeper, and then grab the liquidity below this lows, and then move back up, right? And then at this point, this block became good to trade, right? But this happened during the Asian session, and I wasn't trading, so I easily could have just, as it came back down, just take this trade and move and start trading it to the upside, right? But that didn't happen. I wasn't on the chart, and then broke structures to the upside. So now this became the 5-minute protected low, right? And we come back into, to mitigate this block, right? And then we had this impulsive move to the upside that broke the structure of the 1 hour. So everything here, it's mitigated, except now this move over here. Now this move over here is the one that, when I came in, basically, when I started watching, like at 10 p.m., like we were coming down basically here, breaking structure to the downside. Now I look, where's the range that I'm in, and I see that it's this pullback, and I see that from this from this run, this is the only zone that has not been mitigated. Okay, everything else has been mitigated here, but this zone was not, and this was the impulse that broke the structure here. So what I did is I was watching for this zone, okay, and I had it marked up like this. And as prices started to come into the zone, basically exactly when London opened, okay, I went even into the 1 minute, and I started watching price inside the 1 minute structure. And people might say, oh, the 1 minute structure, like, why? It's all noise. But if I don't tell you that this is a 1 minute structure, and you see this, right, I can easily tell you, oh, this is the 4 hour chart, or this is the 1 hour chart. Like if you didn't know that this was the 5 minutes, and I just show you this, right, what do you see? You see basically a bullish market, right? Well, right now a bearish market, and if we follow this, we will see the same thing that we have been learning during this video. We have this 1 minute structure that now fell, right? The broke structure now to the upside, right? And here, since I already was, looking for a breaker structure here, this was the confirmation, right? I had this 5 minute zone or 15 minute zone and 5 minutes, right? Because you can even see this in the 15 minutes, right? If we go here, you could have easily see right here the last candle that grabbed all this liquidity, and then this bunch of green candles. So I'm waiting for this 15 minutes supply zone that on the 5 minutes, the demand zone that on the 5 minutes is actually a full move down that never got mitigated, right? So now I'm waiting for basically a break of structure here on the 1 minute, and that happened basically over here. And when I saw this impulse all the way up, I bought this market over here on the 1 minute. What I did is I bought this market after this candle on this breaker structure to the upside, and that's when I took this trade like this. When my protected low was this, with this one right here, and I took this, and this, my target was the first target is this one, and this was a 125. At this point, I took half the position out, right? And right now, since we already broke the 1 hour again, I'm expecting maybe, you know, on Sunday open, it's gonna come back to mitigate a little bit of this to continue, because the 1 hour it's already bullish, and we already came to mitigate the deepest part. We already came to mitigate the deepest part of the 4 hour swing, right? And this is my pivot point. So now this, I already took 3%, made 3% of this on this trade, because it's already 1 to 6, right? And right now I'm sitting on 3% that is still floating, right? But right now my next target will be, the next targets are basically this high, because I'm expecting right now the 1 hour, since the 1 hour is already bullish, I'm expecting that to continue all the way to the heights. Now that might not happen. It might come over all the way here, maybe come back down. This, we have 1 hour supply, I mean demand zone over here, that we only mitigated the open with this candle, right? And it might come even deeper, or it might come to mitigate even deeper over here, right? So this can easily, that's why we manage our trades the way I do, because that way, even though in this trade I already made 3%, because it ran 1 to 6 already, so I already made 3%. If this trade on the open, it decides to, instead of doing this, instead of keep running, the market decides to just come back down and mitigate deeper before continue higher, this is valid too, right? But we already made money on this trade, and if it does this, then probably it's going to take another 2 days, and then I'm going to get on another trade to sell it to the downside until what? Until I break structure to the upside, and then position myself on this break of structure, on this pullback, right? To trade it, to take the same trade basically somewhere over here to continue that 4 hour run. And at that point, right, I'm gonna partial some of the first heights, and then by the end it gets over here, it's gonna be like 1 to 20, 1 to 25, which I will probably have, like by then probably only have half or 25% of the original position, because I'm already partial, you know, taking partials at heights. But that trade is still gonna, you know, it's gonna make me like, you know, like 10 RR, right? Instead of just, you know, taking 1 to 2s or 1 to 1.5s, you know. So this way of trading and trading on the lower time frames allows me to have a higher risk to reward, and I can be wrong a lot more times because my wins are bigger and my losers are small. Okay, so that's, I think we're gonna stop right here for this video, and on the next video we are going to go more into supply blocks and demand blocks. Okay, basically you have seen a little bit of how I use the full pullback, right? The full pullback to basically to give myself a bias on the market, expecting that pullback to be taken out, right? And then if that gets taken out, then now I'm waiting for the next pullback back into the original pullback, go into the lower time frames and find the same setup that I'm looking at the bigger time frame, but looking at it over here on the 15 minutes or the 5 minutes, right? And now even if I'm wrong about it, right? Even if I'm wrong about it, because now I'm so deep into like the lower time frames, this can easily collapse and continue lower. But now I already made money on this trade, because let's say you were looking at this and you were trading, I don't know, resistance, and you're waiting for the, you know, the pullback, and it never happened, right? So right now it's bouncing back, right, from this resistance that you think it's over here, or it could be here, I don't even know. But if it comes back down and then collapses through, you never got into this trade over here. Well, I already, you know, made some money on these few candles over here. So we're just gonna stop right here, and I'll see you guys in the next video, and we're gonna talk about supply blocks and demand blocks. Stay tuned, guys. See you.